Good evening. Good evening. We are talking about homeowners insurance and the importance of homeowners insurance, how you can get the best or the determining what's the best way to get the best price on homeowners insurance. And we actually have a special guest tonight. Yes, we are going to be interviewing a special guest. Her name is Mrs. Keiona Stewart. She is the owner of an Allstate agency in the Atlanta, Georgia area. And we're going to bring Keiona in now. Hey, good evening, Keiona. You're on mute.
There we go. I said, good evening, Kevin. How are you?
I'm good, and yourself?
I am doing absolutely wonderful. Thanks for having me.
No problem. I introduced you a little bit. Tell us a little bit about who you are, what you do.
So, as you stated, I am a exclusive agent with Allstate, and I have been in the industry since 2012. So that makes it officially 11 years. And insurance has changed over that time. I remember when I first started, I would say, okay, insurance is not like what my grandmother had. So, in during that time, my grandmother had a $100 deductible, a $250 deductible. But now, 10, 11 years later, insurance is not even what we had 2, 3 years ago. So insurance has definitely changed, and we have two offices located in the Metro Atlanta area. So in terms of getting to know more about that or explaining fully the coverages that you have, we have two locations that can help you with that.
Awesome, awesome. So let's get into it. Um, so from my side as the lender, a buyer has to have homeowners insurance. We will not lend to anybody if they don't have their home insured by a homeowners insurance company. Um, the reason being, if a person loses, if their house catches on fire, or if an active guide knocks the house down and destroy it, then everybody loses. The buyer loses, well, the homeowner loses, the lender loses. Um, so from there, what happens is when a client goes under contract, I refer them to my one of my partners who gives insurance quotes. Kiana is one of the people that I allow to service. Well, I introduce my clients to, and then I allow her as the lender to explain the policy to them and what they're getting. All I know is what the premium is, and I know what she tells me about my policy. I know enough to be dangerous, but the interactings, how to get lower insurance, what's best for them, what type of coverage they have, does it cover my dog, does it cover my jewelry? Those are questions that you ask the insurance agent. So, Kiana, one of the questions that I get all the time is how do I get the lowest insurance quote? Can you tell us a little bit about what goes into quoting a person when you're quoting their homeowner's insurance?
Sure, I can tell you what goes into quoting a person when we're looking to put a premium together for homeowners insurance. Believe it or not, your credit does go into your homeowner's quote. So while we don't get a credit score per se, so you are looking at numbers like 680, 700, 600, whatever their credit score is. Somewhere in the background, in the back of the computers, they're taking your payment history and your credit score and they're putting that together with other information to come up with what we call an insurance score. So I never know a customer's credit number or their FICO score. I don't know that. But what I do know is their insurance score. And built inside that number is their credit. Your credit score is a 3 digit number, your insurance score is a 2 digit number. So there's no correlation. But your credit does and can have an impact on your insurance premium. Much like when you call Georgia Power or whatever your utility company is, they will run your credit to determine how much of a deposit or if you have to put a deposit down. Insurance companies look at that as well. So, credit is one of the factors that goes into your premium. Also, how much and how long you've had insurance is also a factor. In the state of Georgia, you are required to have renter's insurance. Most apartment communities require you to have renter's insurance. They will either offer it as a part of their lease or you can get it independently, which I always recommend you get it independently because if you're getting it as a part of your lease, they are covered, you are not. in most cases. They are covered, you are not. So the amount of insurance that you've had and how long you've had insurance. And then we start to look at, when it comes to homeowners insurance, we start to look at the factors of your home. So one of the things that the lender is looking for is, to your point, if there is a total loss, if the house burns down overnight, how are we going to be indemnified? And so, what an insurance company has to do is we look at what we call replacement costs, which is very different from market value. So, a person can be buying a house for $200,000, but to replace that house in 2023, it could really cost $300,000 to replace it from the ground. So, one of the things that we look at when determining your premium is the overall replacement cost of that house. And we're looking at several different things. We're looking at whether you have a built-in garage or an attached garage, how many restrooms, how many floors, is it brick on the outside, or is it completely vinyl siding? So there's a lot of factors that we look at when it comes to the house. And we also look at how many individuals are living in the house. One of the things that's on the insurance quote is additional living expenses. So in the scenario that we provided, if the house is burned down overnight, or if there's a total loss, then every homeowner's insurance policy has a additional living clause, if you will, or additional living expense, which determines how much an insurance company, the maximum the insurance company will pay out to put you in a different place while your house is being rebuilt. So those are just some general factors. There are some basics that every homeowner's policy will come with, and depending on your situation, we will start to add additional coverage to those factors. For example, if it's only one person living into the home, to cover someone for additional living expenses will be less for one person than it will be for four individuals, right? Four individuals, we want to make sure that we have more than $100,000 on there for additional living expenses. For one person, maybe $100,000 is enough to get them through 12 months. But I would say the primary factors will be, yes, your credit is one, the amount of insurance that you have, how long you've had that insurance, specifically for homeowners insurance, the replacement cost as well.
Okay, cool. Um, how does using all having auto insurance and bundling it all together, is that really a true savings?
That is a true savings. And I'm glad you asked that question. I saw a commercial with the Peyton brothers the other day, and there's another celebrity calling in saying that she wanted to bundle her policy, because he kind of put that out there to the consumer. And that's what we talk about now. We know about bundling. Everyone knows about what it is to bundle your policy. And every company cannot bundle your policy and give you a discount. So, for example, Geico does not have a homeowner's product. They will set you up with another company, but they do not have a homeowner's product. So if you have a Geico auto claim, you're not going to call the same department for your Geico homeowner's claim, because they don't have a homeowner's product. And the same thing with Progressive as well. You're going to essentially be with two different companies. To whereas Allstate, we provide both home and auto, so we're able to give you a true bundled rate. You're going to get a discount from having more than one policy with the company. And in certain situations, depending on, let's say, underwriting guidelines, and that's regardless of what company you're with, because I know at one point Liberty Mutual was doing the same thing. You have to have your auto in order to have your home, just because, again, according to certain underwriting guidelines at that time.
Okay. And in terms of, so I'll have clients who will say, "Hey, I'm going to reach out to my auto insurance, who I have auto insurance with, and get a quote." I say, "Okay, cool. I'm still going to refer you just so you can have more than one quote." Most of the time, when they come back with their auto quote, well, from their auto insurance, the quote is way higher than bundling with someone else. Why would that be?
Well,
Why?
it could.
I know you don't know exactly, but could you tell me some factors that go into that?
Well, what it could be exactly what I talked about earlier, that the company that they're with really doesn't offer a true bundled product. So they can't get the discount on the home because that company doesn't truly offer a home. What they do is they provide a referral to another company, but they don't offer the true homeowner's product. So there's no discount on the home.
Got you.
Um,
And,
I would say I would say, in addition to that, it could be based on the factors that they put in there. It could be, for one of the things that we do when we're putting together a homeowner's quote, we would literally go to Google and we would go to the tax site to get the best information that we can get. A customer could say, "Oh, I think I have about 1,200 square feet," but the tax site could say 1,500 square feet. So we have to have that conversation because that 300 square feet difference can make a difference, will make a difference in the premium
Wow. For the replacement cost, right?
from the replacement cost, which in turn impacts the premium.
Wow. So let's talk about if I'm a borrower and I'm coming to you, what should I have prepared to give you so you can give me the best, give me have the best opportunity to quote me, the best way. What do I need to provide you guys?
I mean, you're going to need the simple information that you already know about yourself, your personal information, name, telephone number, driver's license, date of birth, um, obviously the email so that we can email you the quote, and additional family members, whether you have a dog or not, that's going to be in the home. That's something important because we want to make sure that we provide you the right amount of coverage. If you have a dog, for example, when it comes to family liability, definitely if you have a dog, I want to give you a minimum of $300,000 in that coverage, which is only going to add $2 more to the premium amount, not a significant difference. And as I explained earlier, the amount of family members that you have in there will also help me put the right amount of additional living expenses if you need that. I have two customers who recently needed that. I literally have two customers where their house burned down. So the additional living expenses had to kick in. Um, and one of the things that and you should know information about the house. So sometimes we can't always see the back of the house. There could be a deck back there, right? And if there's a deck back there, we need to make sure that we have that deck on our quote, because when they do an inspection, if we don't find or see the deck, but the inspector does, the inspector is going to add the square footage for the deck. And now here we are, we're in a difference of square footage, which is going to impact the replacement costs. So, and a homeowner or a home buyer will typically know that they will have seen the house. But I would say more importantly, you want to come with your patients so that the agent that you're talking to can explain something to you and explain to you how they came up with those factors. Most people want to rush through the process because we have other companies that say, hey, call us and in 15 minutes, you can save some money and you can get the price. Well, most people, because of that, are driven to shop for insurance based on price. And you never really think about what you have until you have a claim. So I would say the most important thing that you can come is your patience because sometimes I have won a customer just because the 1-800 number that they've called for whatever company just asked them some information, plugged it in, and gave them a price to where me and my agents would have reviewed the coverages and they felt like they had a better understanding of what they have. And this is the person that they'd like to talk to in the event that something goes wrong.
Wow, that's good to know. So in terms of coverage, and you said that depending on how long you've had insurance, is there a difference between a quote if I was a first time home buyer versus an existing home buyer? Are there any
Yes.
home buy? Okay, go ahead.
And that can be driven by a lot of things, right? So, for example, if you're a first time home buyer and you're buying new construction, you have a newer roof, okay? Versus someone who's been living in their house for a couple of years. But the main factor, the main thing that I think about when I'm thinking about an Allstate quote is we're going to give you a new homeowner discount as well. Because typically new homeowners are shelling out lots of money from the closing costs, from whatever repairs that they have to do on the other side once they purchase a house. That new homeowners discount is going to be important.
Okay. And claims. If I have a claim and it was not paid out, does that follow me? Does it affect me?
The answer is yes to both of those. If you have a claim that was not paid out, it follows you much like a driving or a speeding ticket does. So I've been in Georgia, like I said, for 11 years. But if I moved to Texas and I was either in an accident or got a speeding ticket, that is going to show up in Texas, right? The date that I got into an accident or got a speeding ticket, that is going to show up in Texas. So if you have a claim that had zero payout, then you have a claim. So it will follow you. If you have a claim that has zero payout, it will impact you. There's typically three things that they look at with claims. They look at the type of claim. And so what I mean by type of claim, you can have a theft claim, you can have a water claim, you can have a property damage claim. Those are different types of claims, examples of different types of claim. So they look at the type of claim, they look at the amount of claims. Okay. So this claim, this example that you've explained to me is a $0 payout, but it's still one claim. So that's how it's going to impact you. And the third thing that they look at as well is obviously the amount that was paid out. So the good thing is that it's a $0 amount. The bad thing is that you filed a claim. And I tell customers that filing a claim is like dialing 911. If you dial 911 and hang up, they're going to call you back. Like you can't say, oh, I didn't intend to do that. If you file a claim and it's a $0 payout, you can't call and say, well, Keon, I need to get this off. Yeah, I never paid anything. I never did anything. You shouldn't have that on my record. You filed a claim. You still talk to the claims department, and depending on um, they could have dispatched someone to your house and found out that it was not a coverage claim, but the insurance company still had to use resources to dispatch someone to your house to find out it's not a covered claim. So I typically like to tell my customers to call into the office and let us talk about it to see if it's worth you filing a claim. Because you have to look at your deductible. If you have damage on your home and it's below your deductible, 1,000 or 2,500, then it makes no sense to file a claim because your deductible is a portion that you're responsible for. If you have something that costs $800 and you have $1,000 claim, I mean, it's $1,000 deductible, that's a zero payout claim. That claim is not going to be covered because it's below the deductible. Even if it's a coverable event, Allstate or any other company, it will not pay out on that claim because it's below your deductible.
So, so what should I do if I think I have an issue? Let's say I feel like um, my roof needs to be replaced. What should I do to see if it's even worth filing a claim?
So typically, what I suggest customers do is, and it's a double-edged sword, but I suggest that they get what word am I looking for? Get a quote. Get a quote on what the issue is. Why is it that way, and how much is it going to cost? And I can guarantee you, if you got three different quotes, you're probably going to get very, very different prices. You may get a $12,000 quote because they say you need an entire new roof. It's horrible up there, and your roof has been impacted by all the weather since the last 5 years. You may have someone else that says you got a couple of shingles missing. I'll charge you $250 to put it up, right? And then you may have somebody else that says you only need half of your roof replaced. That's the good news. And I got even greater news: the insurance company will repair it. Um, and typically, if you're in that situation where you have three dramatic different prices, you still don't know what the correct one is. But you also know that you probably should get three more. But typically, I tell an individual to get quotes and then let's look at their deductible, right? The last time I talked to an individual about their roof, and it was an older lady, and she said that they told her that your insurance company will pay for it. I said, well, first of all, do you know that you have a $5,000 deductible? So how much did they quote you for this pricing? She was like $6,000. I said, okay, you're responsible for the first $5,000 of it, even if it's paid by Allstate. So Allstate is only going to pay out $1,000. So I tell them to do their homework first because a lot of times what I found is customers, not all the time, but customers can be disappointed in the insurance company because of their original expectations, right? So I put my caption is what you need to know about insurance in 2023. Growing up, my grandmother, when she had insurance on her home, if she had a roof problem, she got a completely new roof. Insurance companies do not do that in 2023 anymore. If they can only replace a portion of the roof versus the entire roof of $6,000 and only replacing a portion of the roof of $2,000, why do they have to replace the entire portion of the roof? Right? So that's one of the reasons why I say you should get a quote so you can understand what's really going on. And typically, if they are going to be on top of your roof, I would think that before a person comes down and tell me how much they're going to charge me and what's wrong, that they are going to be coming down with pictures as well. So if they're telling you that you have a hole in your, I'm trying to think of one of the words, I forget what it is, but if they say you have a hole up there, they should be able to come back down and show you pictures of where the hole is, of where the roof is rotting, or whatever the situation should be. And I think another thing that when it comes to roofing, customers need to be aware of, or consumers need to be aware of, is that insurance companies don't pay for normal wear and tear. If your roof is 8 years old, there is no way that an insurance company in 2023 is going to replace your roof without it depreciating it, because that roof has been on your house for 8 years. There is wear and tear built into that. So you're not going to get a completely new roof because let's just say 8 years of it has been used. But I think
Wow.
they should call and they should talk to their insurance agent to get an understanding of what the process looks like, and to also get some feedback on what their next steps should be. They should also understand what their deductible is so they can know how much they're responsible for that, right? Because some people don't know what their deductible is, right? So most companies will have a different deductible for, let's say, theft and property damage than you do for a weather related deductible. Those two can be different. Sometimes I like to make them the same. That way, the customer only has to remember one number versus remembering two. But at the end of the day, they should call their insurance agent and have a conversation.
Okay. So a question that I had also is the monthly payment or the premium for a townhouse and a condo and a single family different?
Yes.
How so?
Um, so for the single family, we are insuring the entire house. For a townhome or a condo, it depends on the covenants that the HOA has in place. So a condo or a townhouse can have what's called a master policy. And that master policy, that master insurance policy has a deductible. That deductible could be 5,000, it could be 25,000, right? So if it's a $25,000 deductible, think about what your HOA has decided to do. They have decided that before the insurance company pays anything out on their policy, that the HOA or the individuals collectively will fork over $25,000 first. Okay. And so that that leaves a lot of room for what the HOA would be responsible for paying. So I always tell an individual who has a condo or a townhome that you need to find out if you have a master policy. And if you do, get a copy of that master policy so you can read it for yourself and you can see what the deductibles are. Because that's also going to establish where we start. Because depending on where the master policy leaves off is where we pick up. Sometimes a master policy could say, hey, we're covering the roof. My condo's master policy says we're covering the roof. Okay. Someone else's condo master policy may say we're not covering the roof. So that's why it's important to take a look at that to know what it is. And in certain situations, I've asked the customers to say, hey, send me your master policy so that I can make sure that I'm putting together your policy correctly.
Wow.
But the pricing will be different. And then, too, if you think about it from a replacement cost standpoint, um, the the roof on a house, depending on how the house is built, the square footage can be different to whereas on a townhome, if I just look, for example, if you think about a ranch style house, right, that roof is going to cover more surface area than a townhouse that kind of goes from front to back. So it's also based on replacement costs. And depending on how much the master policy is taking responsibility for, then that determines how we're building our replacement costs, which in turn has an impact on the premium.
Okay. So we have a question. Well, maybe a statement. I need to rerun my quote. I need my quote rerun. Then I assume on new construction, the dwelling coverage amounts was much less than the cost of a home. Is this typical?
Um, there can sometimes be a difference between, again, the market value and the replacement value. But if I'm reading this question, he said the dwelling coverage amount was much less than the cost of the home. So these two numbers don't always align. If we think about as we were beginning to come out of the pandemic in Georgia, much like other parts of America, people were overbidding for a house. So what they were paying for the house was more than what the actual replacement cost of the house. So depending on when you purchased that house and how much you paid for that house, how bad you wanted for that house, the replacement cost could be less. Do you follow me on that one?
Yeah,
Okay,
I get
awesome,
it.
awesome. So, but I mean, Um, and I think again, it kind of goes back into what year the home it says random username, what year the home was purchased, because always the replacement costs and the dwelling amount. I'm sorry, the dwelling amount, which is the same thing as a replacement cost, and the market value may not align. And depending on the policy, you could actually have what you need. So I've had one customer call in and say, "Hey, I want my replacement cost to be this amount." And I said, well, your base replacement cost is X, but we've added on an additional 120% amount, but she was not adding on that additional amount. And so I had to walk her through that calculation. So again, I would have to see the policy to read everything that's in your policy to actually see if your dwelling amount has that additional coverage listed on there, but it's only listed as a percentage. And so you then have to add that percentage in there.
Gotcha. They said it was built in 2023.
It was built in 2023. Dwelling coverage
Yep.
amount was much less than the cost of the home. I would say in 2023, because of inflation, we've all seen things go up, right? Just supplies everywhere. This is one thing that, like the other day, I did a quote, and I think it came out at 200,000. I went and looked at what it was, and I was like, I'm not so sure about this amount. Like, if this customer was to lose their house overnight, will this 200,000 be enough to replace this house? And so, for that perspective, I went and added on the highest percentage that I can to make sure that the dwelling amount would be sufficient to push us into the future. I see a lot of customers having an increase in their homeowners policy, and this year is driven mostly by insurance companies are increasing the replacement costs because we're seeing an increase in inflation in other areas that's driving that increase. So if it was in 2023, sure, I welcome. I think he said I need to get my quote rerun. I welcome doing a quote for you. I would also say call and have a conversation with your insurance agent because they obviously will be able to shed more light onto what's going on there. Because again, you could have that 20% that's built in or that 40% that's built in, and it's only listed on your policy as a percentage, and you have to add that amount to the actual dwelling amount that you see.
Gotcha. Another question: is there a product that covers the gap between the market value, which is higher, and the replacement cost, which is lower, if the house is a total loss and I'm looking to get rid of the mortgage and move elsewhere?
Well, um, I'll stick to how you because my first thought was yes and no, and I'll just stick to the original one. I mean, um, so the insurance company is only responsible for the replacement costs. Again, if you overpaid for the house, that's not the insurance company responsibility. If you think about insurance in general, is to indemnify you, to take you back to where you should have been, where you should have been. So I would say from looking at this question in its purity, there's not a gap coverage that's going to cover you from one place to the other. I will also say though that your lender, the mortgage company, tries to do a good job. Keep in mind that they want to be covered as well, because if you're out of a house, most people are not going to continue to pay on something that they no longer have, and they want you to continue to pay. That's how they make their money. So they're going to do a good job to try and make sure that they have the right amount of coverage on there as well. That is one of the most unpopular questions that I get from a loan officer. I need my replacement cost to be X, Y, and Z, or and so I can go in and I can add extended coverage. But the baseline dwelling amount has to be, insurance companies has invested millions of dollars into what it takes to replace this house. Like we use a software to do that. But to answer your question in its purity, there's not a gap coverage per se, because again, if the lender has a problem with it, they're going to let us know, and we try and get it as close as possible. And you may have to pay extra premium for that if that's what they're requesting. But there are some ways to kind of close that gap, and you will know beforehand because your lender will only approve you if they see a certain thing that they're looking for, and that's when we can start to add on the percentages to give you 120% more or 140% more.
Gotcha. Um, so Miss Stewart is with Allstate, and her contact information will be dropped below in the description. So we'll get you her contact information so you can reach out to her. We got another question. This is a good one. I want. I actually don't know if I know the answer to this. Does the neighborhood have a reflection on the policy?
So I think my first question would be, can you elaborate on that a little more? So when I read that question, I say yes, and let me tell you what I'm thinking about when I say that, which is the reason why I said I want you to elaborate on that question a little more. So we have some cities that are, what do we call it? Unincorporated. So you can be an unincorporated Gwinnett, or you can be in Gwinnett proper. Depending on where you are, the fire hydrants may be further between in one area than they are in another area. Does everybody follow me? So if I'm in the country, and I'm giving this example so it can be easily understood. If I'm in a country, I may not have as many fire hydrants than I do inside a city. So when you ask me, does a neighborhood impact the policy, the premium policy? The first thing I'm going to say about a home is, I remember one time I did a home quote. It was somewhere in Henry County, and the price came out to be $3,000, and it was a new house. And I was like, what is driving this price of the house? Why is it this amount? It was not over 3,000 square feet, which is when I started to see premiums go that high. And I kept looking, kept looking, kept looking, and then I saw that the fire that the it was coded as a 10, and I can't think of what our insurance term is, but what that tells me is that it was far from a fire hydrant, and not necessarily a fire hydrant. It was far from a fire station. They were more than 3 miles from a fire station. 3 miles for a fire engine. That house is going to burn significantly longer than this firehouse that's down the street from my office, less than a mile. So that's what I think of when you ask about the neighborhood. I think you're probably thinking about other factors of the neighborhood. And it definitely does for auto. I remember when I first moved to Chicago, I was paying more than 300 something dollars a month. This was over 10 years ago. And I was just like, why is my insurance so high? And my agent told me, he said, your car is going to get broken into several times. And it did. I think the last time I was just like, I should just stop locking my door, right? So that's definitely an impact on the auto side. They have those statistics to know and to determine, right? And a little of that is a factor on the home, but not a lot, not enough to be significant. Again, I mentioned earlier that when a house enters more than 3,000 square feet, I know that the premium is going to start inching up to a certain way because, again, it costs more to replace a larger house than it does a smaller house. And I hope that answered your question.
Thank you. We have another question. Can she only help folks in Georgia?
So my offices are located in Georgia, but Allstate is a nationwide company, and I do know other wonderful agents in other states.
Great. Um, I have a question for you. What are some things we can have in our house or prep our house with to get a better quote? I.e., fire extinguisher. Does that help? Does the security system help? Cameras? Does any of that, all that stuff help?
The pure answer is yes. You will get a discount for having a centrally monitored alarm system. So Ring is not centrally monitored. All you get with Ring is you just see somebody breaking into your house. Okay. To whereas ADT, if I'm not here and my alarm goes off, ADT is going to send DeKalb County to my office. Right. So yes, you do get a discount for that. And should you send that alarm certificate over? Absolutely. Um, but those things are not going to be something as significant as the largest discount you can have, which is the bundled rate.
Got you. So me having the bat in the corner being my security system ain't gonna help.
No, we kind of account for that. We call that a local alarm. I mean, we do. We have two options. We have the centrally monitored, and then we have the local. Somebody asked me the other day, "What does it mean to have a local alarm?" I said, "Oh, somebody's going to be there. Your dog is there. That's your local alarm. He is only alarming the people who can hear him locally."
Cool. So with what I want to ask you. So with homeowners insurance, how often should we review our policies with our insurance agent?
You know, I would say at your renewal is always a good time. Typically, people for homeowners insurance, they're calling in around three things. One, their loan has been sold, and so they need to update their mortgagee. Maybe they have a dog, or maybe they've done repairs to the house. Other than that, or and the fourth reason is because they have a claim. Other than that, we really don't hear from homeowners about the homeowners policy as much as we would for an auto. Think about it. You can get a new car, you can add a driver, you can remove a car. There's so many other reasons for the auto policy. But I would say to do an annual review would be important. If your rate is going up, you want to find out if it's going up just because it's going to cost more to replace it. You want to find out if there's anything that you can do, or maybe your situation has changed. Maybe your house has been paid for, and we want to see if we can provide you additional coverage by offering you an umbrella policy, right? Because in this situation, you're no longer protecting the lender; you're completely protecting yourself, right? And an umbrella policy for additional $30 a month is a good thing to have.
Okay. So, are there any changes that we should or need to make if we pay our house off?
Yeah, and it's the one that I just talked about. So when you have a lender, when you have a mortgage company, essentially, I've always viewed it as the mortgage company is really protecting themselves first, right? So if you think about it, like I can best give this example from an auto policy, and then we can think about how that would apply to a home. You have a car, you have an auto policy, you have a lien holder on there, and you get into an accident and your car is totaled, right? But you still have a lien holder, so that means you still owe money on that automobile. They are depending on the value of the car at that time, they're going to pay the lien holder that amount, right? And I've had two cars totaled in Georgia, right? And the value of the car was more than what, or the value of it held its value. So in terms of paying off the lien holder was not a problem, right? So in the beginning, you're protecting the lien holder because we're covering you for total loss. If something happens, then we're rebuilding that house. That way you can continue to pay, right? And we've had to do that. We've had to rebuild houses before. So in a situation where you have paid off your mortgage, you have to think about it now that you are totally responsible for anything that happens on your property and with your house. So then it's more than just replacing your house. It's also about what happens if someone injures themselves while they're on your property. Do you have the right amount of coverage? What happens if little bitty 6 pound Fido decides to go rogue on your neighbor's kid? Small dogs do damages as well, right? So I think if you definitely pay off your house, you should call and you should have a conversation with your insurance agent just to see what have a review to see what type of changes that you should potentially make to your coverage. And a personal umbrella policy would be one of those because not only does it cover the home or any accidents or incidents that you may have with the home from a personal liability standpoint, but will also cover your auto.
How much does a personal umbrella policy cost you?
So personal umbrella policy, first of all, is going to take you into having coverages up to 1 million, $2 million. And because the base coverages are built into the home and into the auto, by the time you add a umbrella policy, you're only paying about $30, $40 a month for it.
Wow. So, with the umbrella policy, is that offered to you when you get your policy, or is that something you need to ask about?
I would say that's something you need to ask about, and I think that's per situation, right? I think that's per situation. So as we hear individual situations, we will suggest additional coverage, and that's with the customer bringing in their patients, answering questions, letting us get to know more about you, so we can offer the right amount of coverage.
Right. So, what if I have, let me see, what if I purchased a home in 2018, and then I kept that home, and in 2021, I purchased another home, but I kept that property in my, both of the properties are in my name. Is that a situation where you would get an umbrella policy,
Yes.
or okay?
I mean, you're widening your exposure, you're widening your risk, and
Okay.
so with the umbrella policy, both houses being in the state of Georgia, the assumption is we can definitely wrap both of those up. Your primary and your secondary home in that umbrella policy. Now,
Got it.
situations start to change if you decide to rent one out and you become a landlord, right? Which is a different policy than the homeowner's policy. So you need to call and again update your situation with your insurance agent. I had a gentleman who called in and said, "Yeah, I rented out my house at the pandemic, but I just forgot to call you." and they've been in there for 3 years, but I have a claim. And he had a homeowner's policy and not a landlord policy.
Mm, that's a good question.
So the claim adjuster called and said, "Help me figure this out." And I said, "Yes, he has a homeowner's policy because he said he rented it out in 2019 and he just forgot to call us and let us know. But the claim is for his is was the claim is against what is technically a landlord, what technically is a rental property. So he didn't have the right coverage. And again, that's a situation to where his expectations of what is and what would have been covered would have caused him to have a negative view on the insurance company because he didn't call to update us. Like he told us both the problem and how we got there in his first statement. And so the claim adjuster
So I'm
called
gonna
me and
play devil's
said,
advocate.
"Yes,
How would they know?
oh, they'll know because the renter is there when they go to the house to look. When they go and look at the house, the renter is gonna. I mean, renters tell us everything. And if it's not the renters, it's the neighbors. I mean, you'd be amazed into how they find out things.
Wow.
So even if he didn't call and say that, they typically know. So, I mean,
Is
because people call and say, "Well, my renter called and told me this." Even if he didn't say that, like it's going, like they tell you, "Hey, this is adjuster Michael Jones, and you're on a recorded line." They're going to go back and listen to that call. They're recording it for a certain reason, so they can make sure that they have it, correctly.
what type of coverage? Because right now, one of the pushes is purchasing multifamily, and you live in one unit and rent out the other three, one, two, or three. Is there a different type of policy that you need for a multifamily unit if it's your primary residence?
Yes, and let's talk about that more, right? So, in your definition of multifamily, I think you had 4 units in there, right?
Right.
So, in my definition of multifamily, I'm going to be five or more, right? So, we know a duplex, a quadplex, and I would say anybody that's venturing into that, you're living in one side or you're living in one of the units, you definitely want to, like, don't wait. One of the things that I've always seen in the industry is that homeowners or people that are buying a house and then shopping for insurance, whether it's a single family or multifamily, is they kind of leave insurance for last. Like and you'll understand this. They're pushing up against that 10-day clear to close, right? So in your world, you need to be ready to close 10 days from your closing date. So if you're closing on the 20th, all of your paperwork, all of your documentation must be in order no later than the 10th, right? And they're probably calling us on day 8. And we don't know if that zero claim, that zero payout claim is going to show up. And now your premium is much more than what you thought it would be, right? We don't know if you've switched from a duplex to a multifamily. So, but to answer your question, yes, there's going to be a different policy because again, we're covering more. You have renters in there, and we need to make sure that if it's a duplex versus a quadplex versus 5 units, those could lend itself to different policies.
Okay. So let me ask you this question. When should I start to get a quote?
So if we think about the example that I just gave, please let's not wait to day number 8. Because again, things do pop up, and I've seen real estate agents where they're like, "Oh, I didn't know that, they had a fire claim 3 years ago when they lived in that apartment." That can completely change the game. So I would say from a standpoint of completely knowing what's in there, right? Especially anyone that's credit challenged, you definitely want to get a quote as soon as possible so your lender can use that number to build into your debt to income ratio. In addition to that, we've seen, and I think we can all kind of agree that we've seen the weather related impacts just across our nation, right? It's hotter in Texas. Texas has also had this past winter where their complete electrical grid went down. We're seeing stronger hurricanes in Florida. And so insurance companies are impacted by that, right? More people filing claims. And because most insurance companies, 99% of them are for profit, right? 99.9 are for profit companies. And when we think about how insurance really works, the only way that an insurance company can continue to pay out claims like that is to raise the premiums for everyone. So I will say in 2023, you definitely don't want to wait, because someone's going to eventually come to me and say, well, my neighbor whose house is just like mine, we have the same amount of square feet, the only difference is my yard may be smaller and he pays $1,200 a month. Why are you charging me $1,800? Well, your neighbor has been with that company for 10 years. Your neighbor's rating could be 10 years old. And yes, it has grown over the years, but your neighbor could be getting some type of favor, if you will, for being with that company for 10 years. Right? Insurance company have different books of businesses they will put customers in based on the amount of claim activity that's in that insurance company book of business. Um, so I would say you definitely want to start shopping as soon as possible, because there are so many different factors. There's somebody asked about the neighborhood. There's location. There's the how close you are to a fire station. There's so many different factors. It takes out the element of surprise in terms of what your rating will be, and it gives you time to either adjust, or make it, or completely make a different decision.
Okay.
Because we all have in our head, as an agent, I'll have someone to call me and say, my rate is too high. And I desperately want to say, well, what do you think it should be? Right? So we all have in our head what we think it should be. But if I ask that question, typically, I think I have asked that question once. She's like, I don't know, but it should be lower. But people don't think about the what insurance looks like in 2023 from an insurance company perspective. So there is primarily only one insurance company that you can go to in Florida. Okay. But every broker is going to tell you, I'll shop for you. And whatever rating you're getting this year is not the same rating that you would have gotten in January of 2023. And the coverage amount that you're getting will not be the same, because of all the hurricanes that's come through the state of Florida. And insurance companies are making changes to their policies in Georgia as well. State Farm often has a percentage deductible. Allstate has a percentage deductible too, but that's not necessarily the default. Most agents that I know, we're going to give you a dollar amount that you can remember to, right? So, in terms of knowing how insurance is changing and your expectation of what you think it should be, I don't really think that you should wait. Um, I know primarily on the auto side, you have very different auto companies or insurance company, major ones at that, that are pulling out of certain states because just for example, in the state of California, you've had three major insurance companies that have pulled out because the insurance commissioner would not let these insurance companies take rate. In order for the insurance company to continue to pay out claims, they have to take rate. They have to raise everyone's rate up. So, in terms of what is going, I hear a major insurance company will be pulling out of homeowners insurance in Texas at the end of this month. I'm not going to mention that major insurance company's name. It's not Allstate. I'm not going to mention that major insurance company name, but I was so shocked when I read this last night. I was just like, I'm going to clock the next 14 days to see if this happened, because that is definitely news to me. And
Wow.
someone who's waiting in the state of Texas to get their insurance, now they're out one less carrier, major carrier.
Wow.
So should you wait? And this was something that just popped up this week. We had another major carrier that talked about reducing applications in certain states as well. I know there's a major carrier, and this is on the auto side, to where they're reducing that also. So should you wait? No, because you can call and find out that maybe you have to go see a local agent versus a 1-800 number when it comes to homeowners policies. But you're continuing to call a 1-800 number, and you're wondering why you're not getting a quote emailed when eventually you need to call a local agent. Things are changing in the insurance industry by week, by month. We're seeing different insurance companies make these adjustments because the whether it's claims on the auto side or whether it's weather related incidents on the homeowner side, insurance companies are having to make adjustments in terms of what they do, so they can continue to pay out claims. In order for an insurance company to be solvent, like, they have to keep so much money when it comes to a homeowner's policy in an account just in the event that your home burns down overnight. So as these claims continue to rise and as the cost to replace these homes continue to rise, insurance companies have to make adjustments as well. So I would like to say, don't wait, because you don't know when you can get it one day and it may not be available the next day.
Wow. What if you are in the midst of, let's let's say you have your quote and it's bound for the 8th of September, and they made that change on the 7th? Do they bind it, or
So
do you
here's
have to go somewhere else?
so I know last week, if not the week before, I started telling my agents that anyone who's calling in to get a homeowner's policy, they need to make a decision that day. They do not have time to wait. One, because I knew a rate increase was coming on our homes. Rate increase, actually, what is today? I think it was on the 28th. Was that the Monday that it went into effect?
You're on mute.
Sorry. Yeah, the 28th was a Monday. So 3 weeks ago, we started telling customers who were calling in, look, if you like our homeowner's price, you don't have time to wait. Monday, the price will be different because we know that a rate increase is coming on the 28th, right? Also, when we had the hurricane that was coming, we were telling customers, a moratorium is coming on Wednesday. If you don't make a decision by now, Wednesday, Thursday, and Friday, we may not be able to bind this policy. So if the office is in tune with the market of what's going to happen, especially with their company, they're not necessarily telling you that to get you to make a decision. I understand that some salespeople could use those type of tactics, but we had a current customer where we had their auto. They wanted to wait till the weekend to do the home, and we called them on Friday and say, Mr. and Mrs. Johnson, you can't wait until Monday if you want this rate. Your rate will be different come Monday because we're having a rate increase on our homeowners policy. And can I tell you what it's going to go to? Not until Monday. We had some customers who believed us. Another customer's policy went up by $200, and they was just like, I can't take the policy because I wanted that other rate. I can't go back to that date to give it to you. So again, this is where I say when you're calling someone, the conversation that you're having, how much detail and what explanations they're giving to you is going to matter. And they may not always do that at the 1-800 number because at a 1-800 number, they know that you can't necessarily get them back on the
That's great.
phone.
So I just want to reset the room. We are speaking with Keiona Stewart of the Allstate Agency. If you're watching the replay, go to the beginning. If you are watching it live and you have a question, drop the question below. If you're new to my channel, do us a huge favor, hit the subscribe button so the notifications can pop up, and also give us a thumbs up. If you're watching the replay, and you have a question, drop the question below. If it's a question for me, I'll get it answered, and if it's a question for Keiona, we will get it to her and she'll get it answered. Again, we're speaking with Keiona Stewart of the Allstate Agency, owner of an Allstate agency, two Allstate agencies, I'm sorry, and might I add, a top producer, not just in Georgia but in the United States. So we do have an expert in the business.
We'll say we write in Georgia. We're only
Right.
local
But
to
you're a
Georgia.
top producer, right?
I've been in the
For all
top of
state.
in our zone. I think we're broken into zones in our zones before.
Okay. All right. So, hey guys, if you have any questions pertaining to insurance, or a non-insurance question, you can drop it below as well. I do have a question for you, Keiona. So, a lot of people, well, some people have collections of things that are valuable to them. Do we have that conversation? Is it, example? Let's say I have a gun collection. Is that insurable?
Yeah, it's insurable. So depending on, like, are we talking? And I'm not saying you have to answer this, but like that's where an insurance agent is going to ask you a couple of questions. Are we talking about antiques? Because that's going to determine where we, insure those guns. How many do you have? Have you had a valuation on the guns? But that's when we're asking you questions. That's again when I say bring your patience, right? Because we're trained to 15 minutes, get your price, and keep on going. I had a customer who called our 1-800 number, got a quote, put the policy in force, and then he called the office back the next day, and he reviewed his policy with the agents. We made some additional changes. It caused his premium to go up by $300, but he had what he needed. And he talked about jewelry being covered on his policy. So he talked about the additional things that was covered. We gave him more of an explanation in terms of around the detail of the policy, what was and was not covered. But I would like to say anything that you value, you definitely need to ask. And, sometimes I open up that conversation with married couples by saying, hey, um, your wedding ring, right? Do you want that covered on your policy? And then we start talking about the value of that. And we need an appraisal in order for that to be covered on the policy if it's worth a certain amount. So oftentimes consumers can think, oh well, if it's in my house, it's covered. Not all the time. The policy is gonna cover base things that you value. You want to make sure that it's covered by asking that question: is this covered in my home on my standard homeowners policy, or do I have to do something additional?
Great. And I guess that goes for when you upgrade the ring as well. You need to revisit and
You need to
have another
revisit.
appraisal.
hmm I
Cool.
see Ricky said, I barely got in. State Farm in California was in escrow and the pullout got announced, but apparently I was already locked in. So what that tells me is that the person who put his policy in place had already, even if he was closing later, they had already said that, look, this policy is going to start on this date. So when State Farm pulled out of California, his policy was already locked in to be started, so he was okay.
Got you. Cool. Question that I get from clients as well. Is there a policy that can cover my home if I were to pass away before it's paid off? So
Yes.
my family's not burdened with that policy, with that home.
Yes. And we typically call that a mortgage protection policy. And that is a life policy. At the end of the day, it's a life policy. And some of those are still around, and you have some, the older ones, typically it will go directly to your lender and pay off the remaining mortgage. And I have a customer who has one of these. And as the mortgage decreases, the value of the policy would decrease. That's an older policy. Policies that are typically issued today, let's say you get a $250,000 policy, it's typically going to be a term policy for 30 years, and that policy is going to remain $250,000 for the length of that 30-year term, right? And so if something happens, then to the person whose life has been insured on that policy, then the $250,000 will go to who they deem as a beneficiary. And then it's up to the beneficiary to take that money and pay off the house.
Wow. Okay. So what would a policy like that cost?
A policy like that is going to depend on whether it's a male or female, and it's also going to depend on the age of the policy. So that's not something that I can come out and say, particularly for, and it's a 50-year-old male for this amount, then it's going to be this amount, because I need to know, does that 50-year-old male, does he smoke? Right? And would there be a medical required? But typically those type of policies, if you think about what you're protecting and the position that you want to put your family in, things like that are valued at the peace of mind that it's going to bring to your family. I always encourage, if you have a family where you have a stay-at-home wife or a stay-at-home mom, right, that's something you definitely want to look to, because if you lose the primary breadwinner, regardless of who the stay-at-home parent is, that's definitely a loss of income that the person who's not working cannot afford.
Great. Well, Keiona, I don't see any additional questions. Again, we are speaking with Keiona Stewart of the Allstate Agency. If you have a question, we have a few more minutes. Um, Drop your question below. If you're watching the replay and you have a question, you can also drop it in the comment section and I will answer it. And if I'm not able to answer it, if it's not a question for me, I'll make sure the question gets to Keiona and that she can answer it for us. If you're new to the channel, do us a huge favor and hit the subscribe button and be notified whenever we go live. And if you are also new to the channel, we have a Facebook group that we're starting to be more interactive in. The link will be below. Join the group, participate, ask the questions, see the successes of the people who are in the group. Again, if you have a question, we've got like 1 minute left. And if not, we will end the live. I know Keiona's got a lot of stuff to do. So, Keiona, we'll have your information below, but if somebody's listening and want to write it down, just give them how should they contact you
I mean, you
or
can
your
also,
office.
sure, you can find me on Google, Keiona Stewart. Type in my name, you'll see all of the Allstate stuff come up. And 770-322-6682 is our primary office telephone number. Once you find me on Google, correct spelling of my name, Keiona Stewart, Stewart, as in Texas, at allstate.com. Is also another way to find me. You email me, that comes directly to my email box. I will, be able to help you. But also, I see that the contact information is down below. I look forward to speaking with you.
Great, great, great. Again, Keiona, thank you for your time. This was very enlightening, very helpful. If you guys have any questions, drop them below. If you don't, this is Kevin Jefferson, the People's Lender. Hit that subscribe note button, give us a thumbs up, and ask your questions. Have a great night.
Thank you, Kevin.
No problem.